presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Hope everyone had a great Thanksgiving. Nothing like having 4 days off, man. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will be manifested through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials trading down 498. Nasdaq's off 177. S&Ps are off 65. That's a downdraft inside the Nasdaq of 1.5%, 1.4% in the S&P and Dow Industrials. Gold contract down $14.70, traded at $17.54 an ounce. We have silver down 52 cents, $21.08 an ounce. Light sweet crude up 71 cents, $76.98 a barrel. Notes and bonds. A 10-year note down 2 ticks, trading 112.31. The 30-year off 5 at 127.14. And King Dollar. King Dollar's on the move top side, up 737 ticks, 106.696. The euro's at 103. The yen is at 138, and the British pound is at 119 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we get a pullback. This is kind of like a classic, man, so we'll see where this goes. You have, we basically went up, Thanksgiving week, no volume whatsoever. Just gave all 3 days back like in a heartbeat. Okay, 6 hours. That being said, though, you only have 39 million shares traded. So my take is that we are going to go to the lowest swing. The lowest swing, 390. So we'll see what happens as we come down there. If we have the volume expand tomorrow, that means that gap is going to go after the gap. The gap is 381, and right now you're at 395. What the SPY has not done is got inside the lower range. The lower range starts at 390 inside of the SPY, 390.39. Now, and the NQs have already got inside this lower range. So the NQs are leading the market down. Bottom line, the NQs also have volume. No, they don't have volume. 28 million is nothing. You're going against 41. So that's light volume. But what you do have, you get the swing point that's laying out here at 280, 72. The lower range starts at 284. So we're down $4.50. You can see we're in the lower range. Now, what that sets up that gap is wide open at 268.56. So that is going to have some highly volatile trading. And my take is right here. It's the good old King Dollar. King Dollar, bottom line, has been messing around with this bottom. We went straight down. Picture this. You went straight down from 114, getting down to the 105, right? We were at 114 on September 28th, okay? So when you do something like that, it's like, okay, this wants to bounce, and if we do just a 0.382 of the last leg, I'm not taking the whole deal, just the last leg, that gives you a 108.279 approximately. So my take is that we're going to get to at least that level. And we'll see how, bottom line, the reaction is between the note and bonds and the market itself. Now, bring up the 10-year right now. We take a look at the 10-year. The 10-year right now is trading flat, down 2 ticks, no big deal. You know, you get a sideways move. Let's see. Yeah, this is what you didn't want the 10-year to do if you thought that rates were actually going to go down. Yeah, this is not good. Okay, so what you did here is that you got over the last highs, the last week, week and a half. The volume is drying up beyond belief. Let me see the 30. Let me TY1. Let me see this. TYA. Make sure yeah, that's I'm on the active contract. Yeah, so that's saying that hey, you know, this bottom line is notes and bonds want to pull back also. You get notes and bonds pulling back. Bottom line, that means that lower price, higher yield. Higher yield means higher dollar. Higher dollar means lower market. Now, let's get in the gold market, because if you're in that gold market, folks, make sure you get your stops in. Because my take is that the way that we went up, this is really tricky, too. And what's tricky about it is this, is that you had, like if we take the GDX, right, it almost looks like that's an ABC up. But the way that I do it inside timing the trade, that it's not. And this is why. Let me show you why. Because when I was doing the gold report this morning, there was 3 or 4 of these. There's actually 3 or 4 gold equities that are ABC struck size up, but there's a lot of them that look like it, but they're not. And the reason is this. See, if we look at the GDX, you had a high that was established at $28.31, right? Then you got a higher high, and that higher high, but they're all around the same. That's my point. That higher high is $28.49. Now, we had 29 million shares there. Well, the first one, which is right next to it, had 46 million. You took the B point out, and we did take it out with 34 million. But the bottom line is that you got to go with the first one at 46. You can't take the second one out here with 29. You can, but I just don't if you want to stay conservative in the aspect of an A to B equals C to D. Because that, to me, is not taking the B point out with volume because of the fact the B point is so close to these other points. And you'll see a lot of them. So, that being said, my take is that if we take a look at the GDX here, you can see you're going after the little swing. You got an expansion of volume. And, you know, this GDX can get down to like 26.11. And right now you're at 27.28. We're going to have a pullback because we stayed up there too long without volume. You know, they had a nice run up when the dollar was going down. Some of these stocks, if you had them, you know, they're 35, 40% up. You don't go 35, 40% up without pulling back another 20%. So that's where we are, my take, inside of that metal market right now. And if we take a look at the actual metal, we pull up the gold contract. You know, the contract right now, we're trading. So you're down 14 bucks. It's not bad. That's that. What number is that? Yeah, see, this is what's going to be tricky here. This wants to get back inside this lower range. If it gets back inside the lower range, which is 1751, that means it's going to go and test the strength. The strength would be 1720, and right now you're at 1754. Not the end of the world, but, you know, just pay attention to it. Our phone number is 877-927-6648. We have the Dow. Dow Industrials are down 513. Nasdaq's off 192. S&P's off 69. We'll come right back, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 524, Nasdaq's down 195, S&P's are off 70. We'll see if we get some volume in here, man. I mean, they're going to jam this thing on the way down. Let's just go into the E-minis for a second. Take a look at them. So this has been a slow and meticulous downdraft all day long. They just did the next leg down. Let me just see this for a second. So put this up. Okay, let's see what we got here. So yeah, they're selling it down, man. And that's this bar here. What are we at? 8 minutes. Well, 800,000. Yeah, you're coming down with volume now. We can make the case here. This is actually a small ABC down in the SPY. So it's a small in the SPY. Let's see what we have here. You got 398. Well, that's $3.20 approximately, which is going to get you 393.20. Yeah, you get small. So 393.20, that's a small intraday ABC structure down. Let me look at the Qs. This also, yeah. This is a nice ABC down. So this is 284. Oh, that's only 2 points. 1 second. Yeah, 284. That still gets you down to the 280 number, you know. So bottom line is that this baby does want to go to lower price. Let's go to our man Jose in Lakeland. Jose, what's going on, brother?
Good afternoon, Tom. Tom, it's Macho Monday. I'm just at a Home Depot hanging out with some rebar, some foam boards.
Well, you gotta get a couple of those hot dogs, man.
Oh, yeah, the hot dogs, too. Oh, yeah.
Yeah.
Hey, Tom, I just got one question for you. I just need a one-word answer. A one-word answer. Is now the time to buy crypto?
Oh, my God. No.
Geez, Tom, can you elaborate a little?
Sure. Listen, to me, crypto is just a Ponzi scheme. So.
Yeah.
Yeah.
Right. So now it's stay away from it.
I would. It's not. Yeah. The only thing crypto and the guys and ladies that are into crypto, that they'll tell you got to sell it to someone else. What are you going to buy with it, man? Do you know what I mean? Yeah. So,
it's
I mean,
yeah, it's the ultimate Ponzi scheme for sure.
Yeah, there's no doubt. And, the whole thing's coming down, folks. Yeah, it's not where it's at.
Tom, your overall view has changed any as far as the economy? You think interest rates will hit 10%, mortgage rates 10%? And is now the time to build a new house with labor and materials down if you got cash?
This is a great question, man. We were just talking about this upstairs because we have a couple floors here, folks. So, and the way that that the economy's set up right now is this: inside the real estate market, there's a stalemate, and the stalemate is this, folks. The stalemate is interest rates went up so fast that many people can't afford houses. The people that can afford houses that have the money don't want to buy them because they feel that they're too high because we had an expansion so dramatically. And then the sellers don't want to come down. So there's a real stalemate right now, and we'll find out which way it breaks. I mean, it's either going to, rates will come down, and then the buyers will say, okay, I'll loosen up a little, or the sellers are going to say, I think we have to come down more. My take, Jose, is that we're not going to see this economy, like next spring is not going to be a fun spring inside the real estate market. That's my take on it, because I think it takes that long for this thing to really get through the deal. Do you know what I'm saying? So yeah, I think there's lower prices coming at us. Now,
okay, but
the aspect of your question, to get to your question, that's a different question, because what does happen is that the lumber prices are low right now. The things that have been high are this, folks. This is how it goes. Windows went up dramatically. I bet hurricane windows went up dramatically. I'm sure they all did. Windows, garage doors. The cement wasn't bad at all, even all the way up and the way down. I don't use a lot of wood, so wood didn't hit me. Labor is not going to come down. So, I'd say that, you can build a new house, build it, man. What are you going to say to your laborers, right? You're going to say, oh, you're going to make 20% less next year. No, they're not. They're probably going to make 10 to 20% more. They are.
I got you.
So, so what you want to do, this is what you want to do. You want to find, when you're looking for real estate right now, folks, find a place that is lower than the replacement cost. Because that's where we're going to go. That's what normally happens. That you're going to be able to buy a place lower than the replacement cost, and that's a deal. That's what you want. And I think we're going to get there. So.
Okay, look, I keep my eye on Redfin, Trulia, Zillow. Boy, I'm seeing a lot of price decreases in my email.
Huge. On the MLS every day right now, folks, there's more. Now, I'm talking about Pinellas County, but Pinellas County is huge, okay? There are more price decreases than houses going on the market. And the days have gone up dramatically. We've seen it. Yeah.
There's a lot of cross currents. It's getting confusing out here. A lot of cross currents.
No, it is confusing. No, I agree, man. I mean, because it's like, and you know what happens here? If you're around someone, so check this out. This personally happened to me. If you're around someone that you really respect inside the business, right? I kept telling this dude, like, hey, man, I'm telling you, this is just, don't do it. And then all of a sudden I was hanging out for about 3 days. And this just happened like a week and a half ago. And I'm saying to myself, hold on, I think he convinced me that everything's going up. And I had a flip, I didn't do anything. But it is, feedback from all of us going, like, what do you think's going on? I think that if we're real lucky, if you happen to be in the market, folks, meaning the equity market and real estate market, I think you're really lucky. And the reason I do is there's a couple different things that happen. That we know stocks go up and down. And whatever stock is worth, it's worth. So whatever real estate's worth, I don't care if it went down 25%. That's all it's worth, man. And some people that aren't in the market do not understand that. So, and of course, we're in long enough, you don't get greedy. If you get greedy, you're done. If you get greedy, you're going to go out there, you're going to buy, and you get your head handed to you. So I'd keep your hands in your pocket for a while. I think you're going to get, next spring, you get some deals, man.
Yeah. I tend to. Well, look. New construction. Why am I buying a 3.2 for $250,000 that's 40, 50 years old with a leaky roof? When you can go new construction, doesn't new construction worth the time and effort that it's going to maintain price?
Yeah, it is, especially what you just brought up, because you're going to get most of the time that even on new builders, you're going to get a 1, 2, 10, a 1 warranty on everything, a 2 is on the appliances, and a 10 is on the whole structure. And then, of course, the roof is a 20-year guarantee. Yeah, it's a good scene, man.
Boy, that's a lot of information, Tom. I'm heading into my own den for a nap.
Have a good one, man. Stay right there, folks. We'll come right back. We have the Dow. Dow's down 541. Nasdaq's off 203. S&P's off 71. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, to Dow. Dow's off 533. You got the Nasdaq off 202. S&P's off 71. Let's go take a look at FIGS for one of our tigers out here. So they provide health care, clothing, lifestyle brands, scrubs, lab coats. The low's $5.55. The high's $34. I have no idea why this is. That's pretty wild. I see this. What I'm looking at here, like, how is this trading at 59 times estimated earnings? Well, that's quite a trip. I mean, I'd look at that fundamentally if you look. I know you're looking at this, but. So let's take a look at this. So what we have is this. Let me put this on a weekly first. Okay, so you get a weekly, but I believe this, 568, 555, 560. No, it hasn't tested the low yet. It's got to test this low. It got down to 568. and the low is 555. See, if it had stopped, when it gets this close, you want it to test that low. So I wouldn't do a thing. I'd be careful. If that doesn't test that low, it's a big deal. Because it'll come back. If we take a look at Goldfields, go back to the gold market for a second out here. We have with Goldfields bottom line and said, yeah, I mean, this is like the expansion. I mean, Goldfields, went from $7.28 up to $12.80. You pulled back, it released a lot of energy that was built up because of the takeover that, they were trying to take over Yamana, then Nico Eagle and Pan American Silver stepped in. This is a nice setup. I mean, I'd wait a bit more. The reason I'd wait is that my take is that all of these are basically going to pull back a bit. That's the way I see this whole thing shaking out right now. Because of the fact that we went up so fast, and when you take a look at these equities, let's say if we look at Royal Gold, one of the streamers, this is going to be the classic, back in and fill in after a big expansion topside. So if we look at Royal Gold, you're going to see, Royal, we just went from $86 up to $110, okay? So now you're backing down, and I think it can back down right to where it broke out. Like this one here can go down to $99, It's not that, it's like $6 more. But I'd sit there and wait. And, there's no doubt you get Powell that's speaking, and the way you got to look at that, folks, okay, is that the way I would look at it, okay, the bottom line, we're going up another 50 basis points. We'll probably go 50 up after that. They're not going to back off this deal. They're going to back off 75 basis points. But when you take a look at this calendar, we have the last meetings in December. That's going to be December 14th. And then, bottom line, we start it right up again. January 26th is, and then one after that, then March 16th. That December 14th meeting, that's going to be 50 basis points, and we're probably going to do 50 basis points. And the January 14th one. And, right now, you're trading, well, we're at 4, so that's going to bring us to 5 on the basically the overnight rate. And, that's a lot of interest, man, for an overnight rate. You look, they're throwing out rates that are pretty amazing. And, yeah, if you do something on a short-term basis, paying that kind of money, it's one thing. On a long-term basis, man, that is a huge amount of money. We take a look at the movers inside the Dow Industrials out here today, and you're going to see the big dogs are down pretty good. We have, Home Depot's doing 54 negative points. You got Goldman, 49, Microsoft, 42, Boeing, 41, United Health, 34. Only positive ones is Merck, 1 point, and Walmart is like a 1/10 of a point. Inside the NDX 100, what do we have? You have Pinduoduo up 13%, NetEase up 2%. Taken away from it, Zoom's down 5.5%, NXPI's down 5%, Micron's down 4.9%, and Biogen's down 4.6%. When you see on this side, NXP, Micron, two big chip makers, yeah. NDX 100, bottom line, chips lead it down, chips lead it up. The NDX leads the NASDAQ leads the market. That's kind of just how the market runs. That's how it shakes out, man. We go into the, let's go into oil, because, we've been talking about this oil market in general, and, oil bounces around $3 to $4 every day. And you can see why now, too, because the bottom line is that if you see some of the prices that they're actually paying, because there's so much Russian oil around, the price is like $20 less than this, by the way, folks, okay? You're not supposed to buy Russian oil, but the bottom line, they're buying it, okay? So you're at 77. Let me do this. CL1. Because this is the second time this came down off this. Now watch this. This thing wants to get down to like $60 or something. Okay, so I take this. There you can see that's 76.25. So it's saving itself right now. Yeah, this will be interesting though. I'm gonna find something that has volume on it, because this could be a big ABC down. We'll see what kind of a bounce we get right now. It's high. 76.25 is the number, but I suspect this thing's going down to 62. That's how this seems to be laying out right now. And what's going to get intriguing, no doubt, is the aspect of, so picture what trade is accounting on, right? They're counting on that, basically people keep saying, okay, we have an oil shortage. Well, we don't. But on top of that, what we do know is that the United States is going to start filling that oil reserve again. So the speculation is, okay, where do they start filling the oil reserve? Okay, they're drawing it down from, let's look at it. I think it's 80s, 90s, right? And the bottom line, it'd be kind of nice to fill it up in the 60s. So if we look at this, this is at the low. So whatever we took it down a lot higher. I mean, the last swing point is 93. So the bottom line is that you get the gist of it. Traders in general, if there's one leak that comes out that we're already, starting to buy oil to fill the reserve, that's what would hold oil up. Let's go over to Apple. So Elon Musk, bottom line, he must be so lonely, man. You have to be talking about Elon Musk every day. Okay? This quote is so crazy, man, it blows my mind. But I think I finally got it with Musk. Musk just has to, you have to talk about him, okay? And he puts things out there now, and I suspect at some point, maybe there already something out there. There has to be, the way the whole social network goes, folks, is that in order to gain attention, you have to get as bizarre as you can get. And Musk is pretty good at that. He's getting a lot better because evidently at Twitter, there's a huge amount of problems at Twitter. He's claiming that they're getting, more feeds, but the bottom line, there's a huge amount of problem. He's out here yapping today. He's like crying. He's saying, Apple's going to cut Twitter ads and even they may block us. It's like, who cares? Do you really care about that? I mean, why? You know what's so weird about this? Why would you care about Twitter? It's a private company. And why would you care about him crying about them cutting their ads? Big deal. And then he's claiming, this is really cool. He's claiming that he's putting things out. Apple doesn't like free speech. Well, how about Apple can take its own money and do whatever it wants with it? Yeah, that's the name of the game, man. You don't like it? Take your money and walk away. That's the quickest way to straighten anything out. Stay right there, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow's up 512, Nasdaq's down 190, and the S&P's off 67. And you know, we're going to be hearing a lot of Fed speak. Okay. Now, what you had out here this morning, and this is, I suspect, this has something to do with the sell-off. I mean, it's all about the dollar. The dollar's higher, so they'll sell it off. But yeah, John Williams come out this morning, folks. He was at the Economic Club in New York having a speech. And the bottom line is that here's his quote, okay? Stronger demand for labor, stronger demand in the economy than I previously thought, and then somewhat higher underlying inflation suggest modestly higher path for policy relative to September, meaning what they said in September. You know, in a separate event, you got the St. Louis Fed Bullard come out and say and he is one of the biggest hawks. Now, the reason he's one of the biggest hawks, folks, he was one of the doves in the 2007-2008 era, and you know, got basically, well, he was wrong. So you know, he's a hawk. What he's saying flat out, markets are underpricing a little bit of the risk that the FOMC will have to be more aggressive rather than less aggressive in order to contain the very substantial inflation that we have in the U.S. Now, Williams is going on to say that he thinks that the first time that you'll actually see a rate cut is in 2024. So, you know, this sets up, man, that we're going higher, and I don't think any of us have seen inflation come down yet. You know, I mean, you got oil coming down, lumber's already been down, but those aren't the things. It's what has happened, folks, is this, and we talked about it before we actually got onto this point. What you have is that once inflation's a perception, number one, but once it gets into the system and into the structure, it's very hard to basically back it down. That's the bottom line. That's how it comes down, you know. So, you know, we'll see where it shakes out. But I think that, you know, they're going to have to crush it. And the crushing it is going to be one of these deals of, let's say they go 50% in December. They go 50%, not 50%, yeah, 50 basis points, okay? 0.5% in December, 0.5% in January. And then if that doesn't get hit, I want to look at this again, because if this doesn't get crushed, you know, this is, let me look at this. Okay, so calendar again. Calendar. May. Yeah, so, yeah, see what happens here? Okay, so you have January. Then you don't have one in February, and you got March. So 50 in December, 50 in January. That brings us up to 5%. And if this thing is not coming down by March, man, I bet they go 75 basis points, man, 0.75 of a point to just really slam the whole deal. And we'll see whether that will do it. But I think that's what they do. And that would be, I'll tell you, yeah, we'll see where this is going to go, man. But that's how I think this thing's laid out. And then and the market was the market. This is what is ironic, man. That when the Fed, you've heard the saying a million times, don't fight the Fed. Well, this market's fighting the Fed like crazy, man. So it's pretty wild watching it, and it's like what I've learned inside of the market in general is that a lot of these sayings are basically propaganda sayings. That's the bottom line. Okay, so that's the calendar for 2022. Okay, well, it's going to get close. One of the Fed, the calendar I just brought up, evidently, it ends in December. And thanks, Peter, by the way. It ends in December. And I just brought it back up to January. They're still going to have that many meetings. So there's going to be a meeting in January. I just don't know what it is. It doesn't change the analysis of what I think is happening here. The bottom line is that we're talking about don't fight the Fed, right? So I think some of these sayings are just pure sayings of people, not people, big banks that always continue to want you to bring money in. Okay? And the reason I'm saying that, one of the biggest heads up I got, and I know many of you Tigers and Tigresses know this, because in the 90s, folks, okay, when day trading was just really starting, that was a bad name. The So's Bandits and all this thing was a bad name. Well, and I had a Bloomberg then. I've had a Bloomberg since 94, I think, okay? And so what I was looking at is that Fidelity's the biggest day trader there is. So I was like, hey, man, what are you talking about here, man? And that's basically the basis of it. They say one thing, but inside it's a whole different ballgame. And Fidelity to this day, I bet, maybe Schwab now, because they got TD Ameritrade, is probably the biggest day trader out there. I don't know the exact number, but Fidelity, at that point, I knew it was, because you can, when I pull this up, you can pull up basically almost every single day how many trades went through. It's public information. That's the bottom line. So pretty wild, though, in the context of where we are. Let's go take a look at Microsoft. So Microsoft, bottom line, this has been highly volatile. This baby here, pulling back again. Now, it hasn't got out of the range. Microsoft, this is going to be interesting, too, because Microsoft's trying to jump out of this 250 range, made it up to 247.99, couldn't do it. So now what you have is that, okay, you're going to go fill that gap. The gap that we have out there, pay attention to, I think it's going to get filled. Now, the cool thing, okay, so let's put this up. The cool thing, looking at these markets, right, is that I really don't, let's put it this way. I see us going higher before we break these lows. And Microsoft's a perfect example of it. See all these gaps? When you have gaps all over the place, we have a gap down in October. You get another gap down when it couldn't make it in, a gap down October 6th, another gap down October 25th when it couldn't make it. Then you get a gap up. When you get a gapping market like that, that's a consolidation. And it's really cool when you have a consolidation out there, because look at this. I mean, this is a monster consolidation. 251's the high, and the bottom's 214. It's Microsoft. Are you kidding me, man? Microsoft comes back to that gap with light volume, man. Just buy the heck out of it. Yeah. I mean, Amazon. Let's go take a look at Amazon. Amazon was catching a little bit earlier, gave it up. And, now this has volume. See this right here? Let me see if this is filled there. So that's 89.48. No, wasn't filled. 89.48 is going to get filled. That gap there, that's going to be Amazon. Hey, listen, Amazon might be the first one to fill the gap. If it is, get all over it. Because for some reason, do you know what 2007, 2008, Amazon was the first stock to make a low and to get out of that low. And it was, I'm going to bring it up right now so you can see this thing, because this is crazy, like how this worked. Let's see. Where are we? Man, going back that far? Holy cow, it doesn't even make any sense. Look at that. It's only $3. Man, times just go. $3 it was? A split adjusted basis. My God. Wow. Stay right there, folks. We'll come right back.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's down 527, Nasdaq's off 183, S&Ps are off 67. Let's go take a look at some of these volumes. So inside the SPY, we're at 47 million, coming into 74. So that's light volume in a big way. Inside the Qs, we take a look at the Qs. Qs have 32. You're coming into 55. Same deal. I suspect what the Qs are going to do tomorrow, though, is jump the creek. The creek was already at 284. Then you got a little one that's laying there at 280. It just looks to me like it's going to bump right down there. If that's what we got, if that's what we have, the Qs are in the lower range, then, I would basically aim for that gap. That gap is wide open, man. And if you're bullish, I really want to see that gap get filled right now. Because the bottom line, if it gets filled, if you fill it with lighter volume, that's where the strength is. That's when you can really get some action to the upside. And what you have there, there's no doubt about it, is that you have the aspect of a couple-day pullback will get people real nervous again, and we'll see where it shakes out. My take is that there's still going to be a pullback. It's a pullback with light volume. Let's go look at the indices right now. And it's because that we've gone up so quick. So we're at 490. That's going to be really short volume inside the NYSE. And same in the NASDAQ, We'll get a lot more volume tomorrow, by the way. So you'll really get a much better understanding. Today is a day people are still getting back to work. There's plenty of, people flying back home from their relatives. Tomorrow is the day that up and at 'em, volume-wise, right across the board. You're going to get a lot of action. That dollar wants higher price, man. They're up 766 right now. You're at 106, 724. It wants higher price. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 in the morning. Great show, folks. Go get him, folks.